Before looking at our performance results, we first would like you to understand how to earn a fully invested return as shown on our website. Unlike most other trading newsletters, our actual trade performance has been reported since 2002. We're very transparent and open, which means we report the results of every trade, whether a winner or loser. To do this, our newsletters have a model account which our members can easily follow. For example, with the Wagner Daily and MTG Stalk Sheet newsletters, the model account is based on $50,000, and since most brokerage firms give margin of 2 to 1, that represents $100,000 in buying power. However, because we also trade real money in our hedge fund, we are quite conservative. Typically, we only use about 25% of our account buying power. This varies, of course. Sometimes we'll use even less than 25%, and other times we may use more. But historically, if you look through the archives of our newsletters, you'll see that we typically are invested only in about 25% of our account buying power in those newsletters. This means that our members can achieve approximately a 400% greater return than what is reported in our actual performance statistics because it's all dependent on one's own risk tolerance. To increase the returns, one simply needs to increase the amount of buying power they are using when following our trades. This is the page on our website that reports the historical results of all the ETF trades taken in the Wagner Daily newsletter. In the third quarter of 2011, for example, notice that net return for the period was 10.31%. Again, this return was earned with an approximate exposure of about 25 to 30% of the model account's buying power. Therefore, members who wish to use a fully invested strategy would have been able to achieve an approximate return of 3 to 4 times greater than this amount for the 3 months in the third quarter of 2011. In this column right here, we have the annualized percentage return since 2002. You can see that based on our actual trade size through the end of the third quarter of 2011, we have a 14.74% annualized return. But again, this is with a conservative approach of using only about 25% of the account's buying power. Therefore, using a fully invested strategy, if somebody was following our trade since 2002, one could have expected to generate 3 to 4 times greater than this amount, which approaches a 50 to 60% annualized percentage return since 2002. Obviously, we have winning quarters and we have losing quarters, but the numbers speak for themselves. Past performance never guarantees future results, but we are quite proud of our long-term results, which prove that our strategy is successful regardless of whether stocks are in an uptrend, downtrend, or just simply range-bound moving sideways.